Let's face it, trading is a really exciting way to earn a living. I mean, there is no dull moment in the financial markets, and there is always an opportunity to earn, and you can trade from anywhere in the world on any market in the world. Unfortunately, 90% of traders do lose money, and that is a fact. Now, that is not because some conspiracy theory that the market is rigged against you, although it is. but really, why most traders lose money is very, very simple. And I will summarize that in 3 reasons why most traders lose money. So let's jump in. Hello everyone, my name is Ali Casey and thank you for joining me on StatOasis channel where we discuss finance, investing, algorithmic trading and everything else in between. The aim of the channel is to arm you with the right education to trade the financial market profitably. And you do that by building robust strategies and trading them inside a portfolio. If you are new to this channel, welcome and make sure to subscribe and hit the notification bell so you don't miss any of the amazing content that I post daily on this channel. Also, if you're getting any value out of these videos, please do share the video with others, smash the like button, as this will give Google a sign to push it to other traders, other investors, so they can get some value out of this video and we can push the message of investing out to the world. Now, there is no shortage of articles about why people lose in trading. And the percentages hover between 80 and 95% depending on what strategy you cite. But really, it's all over the world. This is a study in Brazil. There are studies in the UK and in the US. And they all point, unfortunately, to the same thing, which is all traders start with the dream to get rich. And then 40% trade only for 1 month. They lose everything. 80% quit within 2 years after losing everything. 7% remain after 5 years and only 1% remain profitable after 5 years. Also, another interesting stat is that most stocks also loses money and only a handful of stocks makes money in the indexes. And so just keep that in mind also. Only 4% of stocks contributed all of the stock market gains that exceeded the return of the super safe 1-month treasury bill. All the odds are stacked against you. This is like you are going to the casino and you want to bet 1,000 bets and leave a winner. So let's start with the reasons. The number one reason that traders loses money is unrealistic expectation and low capitalization. Most traders comes to the financial markets with, $500, $2,000, and they want to sit on the beach making 100% every month. In fact, I got email about this. So they treat this like a salary and, as the market will give them money just because they think they can do it. Also, the return is a function of your capital. So if you're getting 30% return, which is really, really good, and your capital is $10,000, that's it. You're getting $3,000 at the end of the year. Hopefully, yes, annualized. So to expect to make $10,000 every month on a $10,000 account will not happen. Of course, you can make $10,000 a month, but you need a lot more capital to achieve that return. So this is a site that offers subscription to monthly subscription to trading systems. And if I click on 1 month return, look at these returns, 24%, 11, 41, 15, 18. They are very good. And then the annualized at 144, 193, 82, 162, 319. Okay, I'm sorry, I'm getting louder because it's okay. So let me put these numbers in perspective, because most of newbies and new traders, they come here and say, oh, this system is listed online, it must be good. I mean, I can see here it's tracked, it's making 24% a month. If you start with $10,000 and making 2% a month, that means on average you're making 26.8% a year. And of course, this is the growth rate, year 1 to year 15, you end up with $353,000. And if we go to 4% a month, then you are making 60% a year. Currently, publicly, the only company, well, it's not a company, the only hedge fund that it's making 60% per year return is Jim Simon Renaissance hedge fund. It's a closed hedge fund only for the people in it because there is no scale left in it. I mean, the money in it is barely enough for them to trade, and they cannot scale it bigger. It's still making them billions a year, but they cannot scale it bigger. The next best thing is in the 20s. That's it. So there is Jim Simon at 60, and then, of course, I'm talking 60 annualized, yes, because anybody can make 60 a year. But to make it consistently, nobody did it until Jim Simon. And then the rest who are making consistently above 20%, there are 3 to 4 people. And most of you are familiar with Warren Buffett, who's been compounding at around 23% per year. But even then, assuming you are Jim Simon level, then this is the return you're going to make. So 4% a month, 60% a year, your 10,000 will be 11 million in 15 years. And at 15% a month, this number is $842 trillion. I couldn't even pronounce the number. It's so big. Okay, it's close to quadrillion. Why would this guy sell this system for $150 a month? I mean, just trade it yourself. Just borrow some money and trade it yourself. That's it. In 5 years, you are at $73 million. So 24%. Oh my God. So in 5 years, you are at $4 billion. In 5 years, you put $10,000 in, you get $4 billion. Who's going to rent that system? Would you rent that system? If you found that system, would you rent it for $100,000? No, because in 5 years, you will make $5 billion. These are all, I'm not going to say it's a scam, wink, wink. It's not going to happen, okay? In order to achieve these things, you must be having 60-70% risk of ruin. That means these systems are designed, yes, you might get this return in 6 months, in 1 year, but the risk to go below zero, it's 60-70% sometimes. Okay, so these are unrealistic at all. Realistically, you are between 10 and extremely good 60. Number 2, traders lose money is trading with no edge and no plan. If you don't have an edge, at the end of the day, you're going to lose money. It's just a matter of how many bets you're going to do. So traders with no edge, no plan, they usually, run after the new indicator, the new system, a new TikTok video, a new YouTube video. They follow something out of nowhere. They have no idea what they're doing, and in the hopes that they can make money. The third and final reason why most traders lose money is failure to manage risk. Now, all of us have been there, and some of you probably are still there. Actually, I would say most of you are still there. But I will talk about myself. At one point in time in my trading career, I remember I deposited like $35,000 and was trading 35 ES E-mini contracts. That means I was trading one contract per $8,000. And my stop loss like 5 and 6 points. So I was risking $400 per contract. Huge amount of risk to carry in the system. So over leverage, it's a killer for new traders. The problem is, like I mentioned, sometimes they don't know and sometimes they do know. So I didn't cover every little detail why traders lose money, but from the 90% of people who lose money, I would say 88% because of these 3 reasons. How you can avoid losing money in the financial market, regardless of your level of your skill. In fact, I don't know your skill level, I don't know your capital, I don't know what strategy are you trading, and I don't know what instrument are you trading, what time frame. I know nothing about you. But I will guarantee you, if you follow the following tips, you will at least break even until you get to the next skill level where you make money. Number 1, reduce your position sizing. I don't care where you are now, reduce it. Most probably, in fact, I know most likely you are trading big. If you cannot sleep at night, if your emotion is roller coaster during the day watching the trades, you're already trading too big. To give you an idea, professionals trade 0.25 to 1% of their account balance on a single trade. So if you have a $10,000 account, then your risk is $25 to $100 per single trade. Now, some professionals do trade at 2% and 5% risk, but they know what they're doing. Number 2, trade daily time frame. Stay away from intraday time frame. In fact, if you can trade weekly time frame, that's even better. But most likely you're looking for excitement, so you need the trades to happen more frequently. So, okay, let's take daily time frame. 3, trade the indexes. Stock indexes are the best vehicle to trade for new traders because they carry a lot of stocks inside them, so they don't move wildly, like they don't do 10% a day move, okay, and they are not easy to manipulate. Of course, you know, they do go in a drawdown and up and down, but still, they are the safest vehicle to start trading instead of going on 1 hour Euro USD or 15 minutes crude oil futures. Number 4, trade mean reversion strategies. The most markets spend 80% of the time just doing nothing, swinging up and down, and only 20% of the time trading. So you will find it a lot easier to look for mean reversion strategies on the indexes than looking for trend following on Euro USD or looking for breakout strategies on crude oil. Number 5, trade a portfolio. Never, never, ever trade single strategy. The best strategy ever will break at one point. You only need uncorrelated strategies inside a portfolio. So you start with 3, hopefully 5, and then you build your way up to 10, 15 strategies. That's going to make you less emotional about the trades because you have too many trades to get married to one of them. And then it doesn't matter if this one loses and this one makes money. You always have something in the system working for you. If you follow the last 5 tips, I guarantee you, you will at least either make a little bit of money or at least break even, but you will not lose money. In fact, I have so many free strategies on this channel that you can start with as a base in your portfolio. But really, the only way to get from breaking even or making a little bit of money to a professional trader, profitable, making lots of money, and I'm talking rich guy money, is education and experience. There is no replacement for education and experience. Do you expect yourself to become a civil engineer in 2 weeks, a doctor, a writer? All these skills and many more takes time to learn and then takes time to get experience at it. Okay? I'm not saying years, but it's not 2 weeks. So it's not about one indicator, it's not about one system, it's many things combined together. So as long as you put the effort to learn and practice, so you get experience and have good foundation with capital, I guarantee you, you will be a profitable trader. So while we started why 90% of traders lose money, if you follow the previous steps, you will be one of the 5% left who make really a lot of money. I'm sure you have some questions. If you do, please do comment below, share the video with others, comment, like, dislike. I love all the engagements you do. Also, if you want to continue this conversation, if you want to mingle with like-minded people, you are more than welcome to join the Discord server through the Patreon link down below. As always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.